Hello, everyone, and welcome into crushthestreet.com. I got David Johnston on the line. He's someone who's an entrepreneur, a developer, an investor, a smart guy in the crypto space. He made his first investment in Bitcoin back in 2012. So a lot of foresight and a lot of guts to get into something so early in its infancy and to see it through. And then obviously in pouring his career and his focus into cryptocurrency and the development of the space really is a testament to who he is and what he's doing. He's the managing director at Yeomans Capital, partner at YGC. It's a family office, his own family office, who has invested in 40 different projects over the years. He serves as the chairman at Factum Inc. And his new project, PegNet, the purpose is to revolutionize the concept of stable coins. And we're going to talk about all of that today and the price of Bitcoin, kind of what's happening in the space. He's local to Austin, Texas, as am I. So local Austinite, David Johnston, thanks for coming on the show with me today.
Hey, it's great to be here. Yeah, I'm glad we could chat. And there's certainly a lot going on in the Austin scene when it comes to crypto. I moved into town in 2012 and started preaching the good word of Bitcoin and Ethereum. And we ended up with, I think there are over 200 crypto related projects in town now. So, yeah, Factum was early as part of that history, but now it's really expanded to a ton of different things that people are doing.
Sure. Well, I moved from California, and I remember Austin being sold to me as the Silicon Valley of the South. And it really is that. I mean, you see Google and Amazon and Facebook and IBM and Dell and a lot of tech things happening here, specifically in Austin. I mean, not just oil as it has conventionally been for many, many years. And I actually used to go to the Factum meetups for a while. I was attending those for a bit. So I'm sure I don't think we've ever met each other at the meetups, but I did attend them a couple times, and they were great. I've spoken to Paul Snow a couple times, a really great guy, a smart guy. And so, yeah, looking forward to chatting with you about what you guys are doing right now.
Yeah, absolutely. I mean, what's really hot right now is all the DeFi applications, right? Decentralized finance has really taken off last year in 2019. And personally, I think it's sort of going to be the big trend for 2020 is these type of applications where people can do decentralized loans. People are looking to get interest for lending their crypto. All of that is really sort of taking off. I mean, if you look at Ethereum, something like 5% of all Ether now are locked up in different DeFi contracts. So sort of a testament to how interested people are in that. And so for Factum, we've always been big on distributed applications and DeFi applications. And so we saw a real need for stablecoins that were decentralized. And so that's what PegNet is all about. It's this new open source project. There's no company, there's no foundation, there's no token sale. It's just a pure mining and open source project that's been launched on top of Factum since last August. And it's just sort of taken off. I mean, the number of miners that have flowed in the system, I think there's 100,000 computers now mining the PegNet protocol. So I guess mineable stablecoins are popular. It's pretty cool to see a decentralized alternative to the other centralized stablecoins out there.
Yeah, it's interesting. I have a close friend who is a trader. He trades cryptocurrencies regularly, and his biggest use case for stablecoins is just to be able to go in and out of cryptos and save on the transaction fees, not having to go into the US dollar, but go into a stablecoin and then go back into a trade. What are some of the benefits of stable coins? Is that the main reason why people are using stable coins? What other reasons are people using stable coins for?
Well, that's definitely a big use, right? Hedging as a trader without having to withdraw to a traditional bank account. It's so much faster to just go into a stable coin. And then as soon as you're bullish again, you can instantly convert back into Ether or Bitcoin or whatever you're bullish on the trend for. And so, yeah, no, I think that's a great use. I mean, we saw the use of stablecoins really take off in 2019. Tether, for example, passed more than $30 billion a day in daily trading volume for Tether USD. I mean, that's more daily trading volume than Bitcoin itself. And it's really the first crypto to pass Bitcoin in daily transaction volume. And I think it's because, we're in a bearish mode the last 12 months or whatever, and people are looking to hedge their value. And so they're going into dollar stablecoins. So you see, USDC and Binance as a stable coin. They've really popped up all over the place to sort of meet that market demand. So yeah, no, I think that's a really obvious use case. It's also just easier if you're going to make payments. And let's say you already have a contract signed in dollars. Well, it's easier just to hold a dollar stablecoin to pay for that contract than, kind of take the risk that the crypto will be either up or down when that contract comes due. And maybe you have enough money or you don't, right? So I think there's a big need for people are used to a particular currency in their country or their region. And so we got to produce stable coins that will sort of give people what they want as far as local currency, but have the advantages of blockchain, which are fast and cheap to send, and they get settlements, within an hour instead of waiting days on a bank.
Sure. I want to circle back to PegNet here in a minute, but I want to bring up the price of Bitcoin, kind of what's going on in the space. Obviously, $8,000 is, I think for a lot of people, a breath of fresh air, considering we saw it kind of spike down. It got into that $6,000 range. And people were wondering if the floor was going to fall out from under it, and getting some support here, seeing it at 8,000 gives it that, that confidence that we've seen the bottom. But there's many predictions out there. I mean, the technical analysts are out there saying it could go to 4,000, or, we're in an up channel, with the halvening coming up. I mean, we got some good potential here going forward. Without getting, putting you on the spot too much regarding the price, I mean, what are your overall thoughts when it comes to Bitcoin, the current prices? I mean, are you a buyer here at $8,000, or are you neutral? I mean, what are your what's your general sentiment at the moment?
Well, for me, I'm always driven by fundamentals. When I first heard about Bitcoin, I was lucky that a friend turned to me and said, "Hey, Dave, did you hear Bitcoin hit $10?" Right? And in 2012, that was a great price, right? It was coming off the lows of $2 in 2011 and early 2012. And when it got to $10, it was a pretty significant move. So, but that was in a time in which, there were only a few users. There's a few 100,000 wallets in the world. And we've seen an explosion of usage, right? We've passed 40 million wallets on blockchain.info, for example. So there's a lot of users now, and now 8,000 is a good price for, I think, where things are on a fundamental basis. But the challenge that Bitcoin has is the transaction volume can't grow a lot without sort of hitting the current limits in scalability. So that's definitely something that I look a lot at. And what we've built with Factom and PegNet is effectively a second layer that solves that scalability problem. So if you want to put more value on these chains, but if you can't fit that value on the base layer, then you really have to move to these second layer solutions. And that's sort of what Factom does by anchoring into Bitcoin every 10 minutes. It has all that security from the base layer, but it provides this huge scalability boost to be able to handle billions of records on top of Factom. That's actually why PegNet chose to build on top of Factom, is because it had all that capacity, and the fees are a tenth of a penny. So the fees are also a lot cheaper in a second layer instead of the base layer. So it's mixed. I think the usage on top will drive usage on Ethereum and Bitcoin. You know, all these DeFi projects are driving demand for Bitcoin and for ETH. But it'll also be a play, I think, that's different than last time, where a lot of the value accrues to these secondary layers. It's going to be interesting to see it play out for sure.
So what has the dynamic of the last couple of years been like for a company such as Factum? Obviously, you're looking at the fundamentals. You're working on building this out, but you know, we haven't seen the enthusiasm the last couple of years the same way we've seen it in 2017. You know, call it the lack of a dynamic bull market. Has it affected the forward momentum of the project, would you say?
Well, Factum has the advantage that as of May 2018, it became fully decentralized. So this was always the goal, to have distributed elections of all the federated servers in the system. So Factum got to that goal in 2018, which means there are now more than 25 companies all around the world that are running Factum federated servers and that are running and really driving the development of the protocol. So it's not on Factum Inc. anymore. It's one of 25 players in the ecosystem that are sort of really driving things forward on code development and new applications. So you take an example like PegNet has really brought a huge amount of energy because it was able to deploy very quickly, just within a few months, instead of having to build its own chain, which can take years. That's been a big encouragement to the Factum community. And people converting assets into PegNet has consumed more than 1.2 million factoids from the market. Those are one-way conversions. They're destroyed. They're gone forever out of the system. We're talking more than 12% of the entire supply of Factum has been removed just in the last few weeks as people are converting into these stablecoins on PegNet. So yeah, it's really brought a lot of energy into the ecosystem the last 4 to 6 months. And I think that's what we need, is some of these killer applications to really take off, right? You know, people don't want to just wait around hoping for the next bull run. We have to build the next bull run with these real world applications that people want. And if that's DeFi and stablecoins, then that's what we ought to be building.
So David, are we dependent on a bull market in Bitcoin to trickle down to the rest of these projects, or can these projects essentially attract capital in it of themselves, build their own market and their own enthusiasm without, you know, Bitcoin going to 20,000 once again and, you know, 50,000? I mean, can it do it on its own without that?
Well, I think things are starting to decouple fundamentally from Bitcoin. And that's one of the trends we've seen with Tether in 2019. Tether USD became that other dominant trading pair, right? Historically, everything's traded against Bitcoin. And with the rise of Ethereum, there are a lot of Ethereum pairs. But really, it's Tether USD and stablecoins that are sort of leading the way now, because people think in dollars and they think in their local currency. And so it's easier, especially for retail people, to just think in dollar terms. And so putting out pairs that are in stablecoins has proved really popular on the exchanges. So yeah, I think things will continue to decouple. Really, even 2017, I would argue, wasn't driven by Bitcoin. I would argue it was driven by Ethereum. It was the $20 billion that flowed into ICOs, largely on top of Ethereum, that drove the demand for Bitcoin and Ether that people were using as the funding mechanism in those ICOs. But it was really the success of Ethereum. It wasn't because payments or some other use case on Bitcoin suddenly took off. It was all the capital that was flowing in to do that funding. And I would say things got, you know, sort of way past the fundamentals, right? It was sort of a, you know, 1999 kind of dot-com boom type moment for the industry. But there are a lot of good projects that got funded and that at this point have delivered code and up and operational, right? I think of Algorand, I think of Hedera, I think of Polymath. There's so much infrastructure that got funded, and those people have built things that didn't exist before, whether they were security tokens or new scalability approaches. So I think we're just getting into the payoff for all of the funding that was done in 2017 and 2018, now here in 2020. So it'll be interesting to see it evolve, but it's got to go back to those fundamentals and really be driven by the usage and the demand that people actually have.
Sure. Well, what about a company like JP Morgan diving into the space and, entering blockchain, right? So many people are unfamiliar with what blockchain really is, and they equate something that Facebook might do with Libra to Bitcoin. Is this, in your opinion, going to add infrastructure to the space, or is it counterproductive for what you are trying to do with decentralized applications on the blockchain?
Well, certainly Libra is a good distance from sort of the ideal structure of a decentralized currency. But what it is, and what I hope it will be, is a bridge into the digital world for most people, right? Sort of an AOL moment when they got their first, connection to the internet, right? When you got your first email. 2 billion people on the Facebook platform getting access to digital currency. I can't see that as anything other than positive for Ethereum and Bitcoin and all the other digital currencies that now these people will have access to. Because as soon as they have Libra tokens, there'll be exchanges that are listing Libra, and therefore you'll have trading pairs into all of those other currencies. So I think it could be possibly the most powerful on-ramp ever built for digital currency. Now, they've certainly seen a lot of headwinds from regulators that have a lot of questions and sort of weren't taking digital currency seriously until Facebook showed up with 2 billion users and said they were going to do this. So it's sort of been a wake-up call for a lot of the governments that they have to figure out their policies. And, in Europe, they're fairly far along in that. In Switzerland, the regulations are very clear. Liechtenstein just passed their blockchain act that went into effect January 1st. The European Union passed a bunch of regulations that went into effect January 1st that said all of the banks can custody crypto tokens, right? So there are places that are doing it right. It's just been pretty slow in the US. And, China has taken an approach of, okay, yeah, we're not doing the crypto thing, but we like blockchain. So blockchain good, crypto bad, right? So there's very mixed approach around the world. And, it's going to be interesting to see how all of that sort of comes to terms with the reality of the technology. Because honestly, this technology is coming whether people like it or not. It's sort of like the internet. You just got to figure out how you're going to respond. But I hope it's going to be positive as they bring all those people into the ecosystem. Now, and I say Facebook has done a much better job than somebody like JP Morgan Coin, which, if you look at the details, like is only available to their institutional clients and only in dollars and only, between JP Morgan accounts. Like it's a really, really limited version of, I don't know, a wire system or something. So, I don't really get the big advantage there. At least Libra was going for an open system that would support lots of people across platforms and have some interoperability. So I think that's probably the much more significant of the two efforts.
So let's talk about blockchain. How resilient is blockchain in the future of commerce and technology as we move forward here in the 21st century, for the next couple hundred years, for that matter? And can it, and I'll follow it up with this, can it be displaced by another technology? I know Hashgraph was going viral on the internet. A few people did some videos on it and, basically called it the destroyer to, blockchain technology. I don't understand the minutia of the details, but do you believe that blockchain is resilient in what it does and, won't have a competitor come along and displace it in an easy or short order fashion?
I think it's one of those definitional things. I'm a big fan of Hedera Hashgraph, And I think what they're doing is really compelling around scalability, and especially for ordering, which is really important in exchange applications. But even if it's not strictly sort of an old-fashioned blockchain, let's call it blockchain adjacent, or sort of the next generation of blockchains. But I think they're going to be very resilient in the sense that our definition may change a little bit. But what do we mean by a blockchain? We mean something that is hashing each block with the history of the previous blocks, right? This compounding series of records that creates a permanent and immutable ledger. And I'm sure that people come up with different databases and different languages and different frameworks to implement that. But I think the core ideas of blockchain are definitely here to stay, right? Triple entry accounting, sort of transparent immutability, proving all of the records in a system. This is the fundamental breakthrough. And I think there's lots of room for different types of blockchains, just like there's room for lots of different types of programming languages and lots of different types of databases. So I've never sort of bought into the tribalism of, sort of got to be one blockchain to rule them all. I don't see that anywhere else in technology, right? If somebody told me there would only be one programming language, I would say, well, I don't really believe that, because, they're all optimized and they all have different trade-offs, benefits, positives and negatives based on what they're going for, right? The programming languages that are best for building websites are not the programming languages that are best for building high-speed trading engines, right? They've just made very different technology choices. And I think that we're going to see the same with blockchain. We're seeing with example of Polymath coming out with their own blockchain that they've announced that's going to focus just on security tokens. And there's a bunch of different challenges in security tokens that are just fundamentally different from somebody like a Stellar who's trying to do micropayments, or Hedera Hashgraph that's taking their approach, right? So I think with each of these different approaches, we're basically going to serve a different niche. Just like, I think of Google for search. I don't think of it for my social apps and stuff like that. So that's okay. I think specialization is good, and it definitely makes things stronger and more robust. But I'd just like to remind people how far we've come. When I got involved in Bitcoin in 2012, there were 10 million Bitcoin and they were $10 a piece. There were $100 million of digital assets in the world. And today there are $200 billion in digital assets. Like, we've come a long way in a short amount of time, and there's still a long way to go, right? There are a couple $100 trillion of traditional assets that we still need to move onto blockchains. And I'm very convinced that all of that value will inevitably move onto blockchains. Just like 20 years ago, you could have said with confidence, yeah, it's going to take a while, but all these bank records are going to move online, right? Everything's going to be digital because it was faster and cheaper. And here, the advantages are just so clear. There's, I don't think any other way it can play out. It's just a question of which blockchains will be used for which use cases.
Well put. Well, David, if you would, maybe just close us out here with kind of some closing thoughts on PegNet, the future. Obviously, it's new. It's a new project you're excited about and working on, and pouring your talent and resources and efforts into. So just kind of let us know a little bit more about it. And, if people want to learn more about it, of course, where they can go and what they can expect to find.
Sure. So if anybody wants to see all of the assets and their prices on PegNet, I'd recommend going to pegnetmarketcap.com. So pegnetmarketcap.com, every 10 minutes, it updates all of the asset prices. And so you can see how much, pegged gold and pegged dollars people are holding on the system. So people have transferred already millions of dollars into the system, which is pretty amazing, given the system's only been around for like 120 days. If you're inclined to mining, check out prosperpool.io. So I funded the first open source mining software in the PegNet ecosystem. And the cool thing about PegNet mining is you can do it on your laptop. You can do it on your CPU. There are no ASICs and there's no advantage to use a GPU when mining PegNet. So it's really built to be something that everybody can run and really get involved in the community. That was the magic of the early days of Bitcoin, is you could download the software, you could play around with it, you could earn a few coins and just get educated on how the whole system works. So PegNet is very much built in that same way, right? There's, again, no ICO, there's no foundation, there's no company. This is just a really cool volunteer effort where people are coding and mining and coming up with cool ideas for things to add to the ecosystem. It's just been amazing how quickly it's grown. For the technical minded, pegnet.org has a ton of information about how the technology works. And probably the most active forum is Discord. So if you go to pegnet.org/chat, it will take you to the PegNet Discord link. So jump in there. There's a ton of channels with lots of different languages and subjects, all supported in the PegNet community. So there's just a ton of people on there all the time. And that's sort of really the heart of the community. So yeah, just encourage people to check it out. There are few things more valuable than learning about this type of fundamental project at a really early stage. I'm really glad I did that with Bitcoin. I'm really glad I did that with Ethereum. And this kind of feels like the same thing. And that's why I'm volunteering my time and donating to this project, because it's something I think is going to be really important.
All right, everyone. David Johnston. David, thank you so much for coming on Crush the Street and taking your time with us today and really educating us on what is going on in the space, and appreciate the work you're doing and the contributions you're making for a better, more competitive world where capitalism thrives and people have higher standards of living as a result of really technology and the free market. So it's a real beautiful thing. So thank you so much.
Amen. You said it. Let's bring some more liberty to the world, my friend.
All right, sir. You have a good one.
You too.